Nikkei, which is at a fresh high, 34-year high on that particular index.
Next level on the downside is the 40 exponential moving average, 40-day exponential moving average, which is a little lower at about 21,432 or so.
At least one board member has submitted her resignation, and that is Manju Agarwal.
The FY24 industry guidance has been cut to -6 to 7%.
The sensex is flat. Actually, there's some red. 21,726 is where the Nifty is at, quickly coming off.
I think the preferred bet would be the PSU banks, because you really don't know when the private sector banks derating would stop.
Apollo Healthco did really well. We had a revenue of 2,087 crores.
We now are the number one player in terms of the retail market.
It's a Friday, but the mood is somber, particularly for the mid-cap universe right now.
I think we are on a very good growth path, very good path, profitability path.
Clearly, it's been a class effect. It's not Biocon Biologics alone.
We gave non-par share. Our objective is to take it to at least 15%. We are almost there already.
Quite a solid over 110-point kind of recovery on the Nifty.
Well, there is a bit of green, and this is the latest sort of swing up that we have on our hands. The market, if you look at it now, at least on the Nifty, is looking better. Well, that was a day so far, and we are getting into the last hour of trade this Friday, last day of the week, and of course, the last hour of the week in terms of trade as well. You're with us here on Closing Bell. We're coming to you from CNBC-TV18 News Studios. I'm Prashant today. With me, my colleagues Reema and Nigel. Guys, hi. Good afternoon.
Hi, 1 hour to go to wrap up the day and the week.
I thought that getting into the final hour of trade was a little bit somber. I was like, come on, we're getting into the last hour of trade. Let's get this done, Prashant.
In style.
Looking forward to the weekend.
And there's green on the screen.
There is green on the screen, but we don't know if it'll be fleeting, because that's been the problem, right? It's been fleeting. In any case, I mean, the point is, if you actually end up 50 points and when you come back on Monday morning, provided, global markets are just okay, then what? Yesterday we had the 200-point sell-off, but there's no follow-through. And if it's a middling kind of a, 0.25% kind of a gain on the Nifty, that's good for the day. But in terms of those looking to try and finding a direction, a more durable kind of a direction on the index, that's been hard to come by. In any case, just to get you through some sort of levels, etc. By the way, the Nifty Bank has been doing much better. The Nifty Bank is, the last I checked, was up over 0.5%. That's the other thing. Again, there also no follow-through, which has now become almost 1% gain. 430 is where the Nifty Bank is. I think ICICI Bank is contributing a fair bit, along with a few others. Here, the 20-day comes into focus very sharply at about 46,060. It's about 1.5% away from where we are right now on the upside for the Nifty Bank. Mid caps and small caps, they've been seeing pressure. Indices are down between 1.5% or so. And we'll see if there's some recovery which comes there. And PSU stocks, the CPSC, PSC, oil and gas, energy, all those indices, they're seeing about 1.5 to 2% kind of drawdowns. Reema.
Well, but individual stocks like PFC, that's seeing a larger drawdown. That's down more than 10%. Realtel, RVNL, SJVN, these are stocks down anywhere between 7 to 10%. SCI, REC. Across the board, you're actually seeing pretty large cuts coming through on some of these mid-cap PSU names. On the frontline pack, the picture's quite pretty good when it comes to the large cap banks. So the Nifty Banking Index is outperforming. That's up nearly 1%, led by State Bank of India and ICICI Bank. And Apollo Hospitals, after giving a positive guidance on Apollo 24/7, is also surging in trade. On the mid-cap end of trade, there is an earnings reaction that you can see in Bajaj Hindustan. Z Entertainment is having a good session, 4-5% up move on that. And Zomato sees follow-through buying after yesterday's good numbers.
Okay, all right. Well, so those are all the top stocks that are moving around. But let's find out, how do you approach the final hour of trade, particularly on the index, and then we'll chat about individual stocks as well. Rahul Mohinder joins us on the show. Hi, Rahul. Good afternoon. Hope you're doing well this afternoon. Tell us, how would you approach the Nifty? As we've been saying, the Nifty is showing signs that it wants to pull back. The problem is it's not lasting. What would your trade be at current reckoning?
Good afternoon. I think, first of all, let's discuss the medium to long-term trend. I think that's not disrupted. We still seem to be fairly steady on it. No major red flags on that front. What's good is 21,500 is, 21,600 is a good support zone. I know we've not yet touched that, but we came pretty close to it. And, I think as long as we kind of sustain holding out this level, this could be an interesting sweet spot for the market to make a little bit of a turn. Now, we're not getting the traction that people want because we've gotten used to very, very sharp up moves. Sometimes it just opens gap up, and that's how the markets take a turn. But on the whole, I would say that at the current levels, one should be poised again on the positive side. Keep 21,600 on the Nifty spot as a benchmark level, below which only one should change one's directional stance. On the Nifty Bank, which has been the weaker one, and why I say that is, the Nifty may have dropped about 2.2%, between February 2nd and the 9th. But if you look at the Nifty Bank, it's gone, about 4.2%. So, it's definitely had a deeper correction, and therefore the Nifty Bank has a lot more work to do to get technically more positive. So I see a lot of resistance at about 46,000. And, till we get past that, I'm not going to be a ready buyer. And when I look selectively within the stocks too, on the Nifty and Nifty Bank, and I start looking at heavyweights, I'm not all that comfortable within the banking space. I still think a stock like Reliance in the short term, can continue to do the magic it's been doing and help the Nifty further.
Okay, what are your trades, Rahul, individual names?
So let's start with Reliance. I think Reliance is still worthy as a short-term buy. I keep a stop loss below 28.90. I'm clearly looking at levels of 2960 to 2970. That's a ballpark target I'd like to work with. TCS is another stock on the list. I think the reason I picked TCS is we've reached a bit of a resistance point on the stock. So I would look at going short on TCS at the current levels with a stop loss at about 4160, and I'm going to be looking at near-term targets of about 4040. That's still a good 100 odd rupees from the current point. So that could be a nice short-term trade. And the next one I'm going to look at is Adani Enterprises. I think this one could be bought into, and with a stop loss below the 3170 level, I think Adani has, the capability to even move to a new high in this move. So to about 3,300 would be the target on Adani Enterprises. So that would be a long position on the stock.
Okay, thank you very much for that. Escorts Kubota has slumped 7%. This is after the company cut the tractor industry guidance. Sonia joins in with the details. Sonia.
Well, thanks a lot for that. As you rightly pointed out, the big news on Escorts Kubota is that the company, after their earnings, cut the tractor guidance for the industry. Now, the FY24 industry guidance has been cut to -6 to 7%. So they're expecting a degrowth of 6 to 7% in the industry versus a growth of 3% earlier. This means that Q4 is likely to be weaker than Q3 for the entire tractor industry. Now, there are a couple of reasons for this. Erratic monsoons, a softer Rabi sowing season, slower demand for the commercial segment tractors is something that Escorts has spoken about. A lot of brokerages have been underweight on Escorts. In fact, BofA Securities has cut their target price to 24.50 on Escorts, while Incred has a reduce with a target price of 20.71. Now, M&M is the biggest Nifty loser today as well. The weak tractor guidance from Escorts is a sentiment hit for a company like M&M that has a large presence in the tractor space as well. Although M&M continues to retain their single-digit growth guidance for the industry, after Escorts guidance, it looks like Q4 could be worse than Q3. Back to you.
Thank you very much for that. Prakash Diwan is now with us on the show. Prakash, Escorts, are you disappointed by the guidance cut?
Good afternoon, Rima. So first and foremost, I am not surprised and neither am I disappointed. The reason is this was something which all of us saw coming. We've seen the kind of, the nature of the monsoon this time. It's been erratic. It's been weak in parts. And the other players have already kind of sounded us about this. So I think Escorts Kubota is late in terms of, managing the expectations for investors. And going forward, probably, you will see this softness, which may not be so dramatically low, given the fact that you buy into stocks with a forward-looking thing. Now, this is something where the demand has already been digested. I would believe Escorts Kubota will probably launch, the trigger for Escorts Kubota specifically would be newer products in the higher HP category, which is where Kubota has a huge strength. And as construction activity picks up, the non-agri usage of these higher HP tractors picks up, things will look slightly better. So I think it's more of expectation management, which is good, but I would really be very disappointed.
Okay, all right. Let's tell you about another stock then that's under pressure in today's trading session, Ramco Cements. Now, there are three big reasons why the stock is under pressure. One is there are weak results that came out. They've announced aggressive capex when their debt is not very, low, and also valuations are not cheap. Let's run you through the first data point. Well, the results, they were weakish. Sales volumes a little bit lower. You had some unseasonal rains that hit them, and also demand was weak in pockets of East India. So that explains the sales volumes number. You also had the EBITDA number. Well, that came in 10% low in comparison to what we were working with. They've also given us some commentary that the way ahead, cement prices are under some pressure during the current period under review. And they've said that the blended fuel consumption cost could come down by around $5 to $10. So pricing has not come back, which is unnatural actually in the Q4. Next up, the new capacity that they've announced. They've said a couple of their capacities, both on the clinker as well as on the cement side, they'll go up. Their estimated project cost for this expansion is on 1,250 crores. And the aggregate, capacity by FY26 will be around 19 million tons of clinker and 26 million tons of cement. So that they'll have an integrated facility of around 26 million tons. Or that's 3 to 4 million tons higher than what it is as of now. The problem is, capex, yes, but debt is close to 5,000 crores. So the street is a little bit skeptical on that. And finally, valuation-wise, not very, very cheap. Trades at around 15 times EV per EBITDA, on an EV per ton at around $135 to around $140 per ton. So you put all that together, the stock is under pressure. But Prakash, what do you think? Ramco Cement, it has this tendency when it gets into a period of out or underperformance, it gets a little bit prolonged. Your view on the stock?
I agree, Nigel. The kind of pricing trend that we are seeing in the South particularly is seeming a bit difficult. So for any company that's working on leverage, it's going to be extremely difficult to be able to manage return ratios which are competitively or comparably placed with some of the larger players which are more pan-India. So you look at how numbers have looked for some of the larger players like Ambuja and Ultratech, which have a pan-India presence. Their dependence on the South is fairly low. And I would believe that's going to be the trend going forward, because there's a lot of spend that's happening in the North, which was not the case earlier. You just had residential usage, which was predominantly, the South factor. Now you have infrastructure and residential both doing so well in the North that parts of Northeast are going to be very rewarding for most players who are there. And there are far better balance sheets with EV per ton being closer to 100, 110, 112, and Ramco would probably not make up for that kind of salience which some of the larger players are offering. So yeah, I do agree. There's always shift from cement. It has a lot of this churn which keeps on happening. I mean, you have consolidation news, you get Sagar and all of this to start buzzing. You have some sort of a capacity expansion. You'll have the Sri Cements and the Ultratechs and the Ambujas start ticking. So you'll always have that. But my favorite continues to be Dalmia Bharat, and Ambuja is something which we've really started liking much more in recent times.
Prakash, do stay on. We need to slip into a very short break. As we do that, here is something truly exciting and empowering. We're talking about an exclusive opportunity for the SMEs out there. We know they're the backbone of our country's economy. They contribute about half of our exports and 29% to the GDP. So let's help them navigate the global landscape and enhance their export-import strategies. We're bringing a curated masterclass led by industry experts, a space where you learn from the best, understand the nuances of international trade, and get inspired by success stories. It's more than a masterclass. It's a roadmap to elevate your business to new heights. If you are an SME with aspirations to make a mark globally, hurry up and register now. Welcome back. ESAP Small Finance is under severe pressure. The stock is down close to about 15% after the asset quality deteriorated significantly. The gross NPAs went up from 2.6 to 4.1, and even in the net NPAs, you've seen it double. So ESAP Small Finance Bank has taken a big knock today, down nearly 15%. MRF also reported their Q3 numbers. The numbers looked fine, a revenue growth of 9%, some margin expansion, big jump in the profits, 500 crore versus 170 crore, but the stock is down close to about 4%. Perhaps profit booking, because if you pull up a 6-month chart or a 1-year chart, you would see MRF has been on a one-way upward trajectory, and in the last 1 year, MRF has gained close to about 51%. Bajaj Hindustan has reported a profit this time of 20 crore compared to a loss of 58 crore year on year, and Bajaj Hindustan is seeing some buying. And in the last few minutes, names like Z Media, a Vodafone Idea, pull up a Vodafone Idea and you would see a very sharp up move coming through on Vodafone Idea too. But LIC has reported a strong set of Q4 earnings, with the value of the new business up 46% and the total APE also reporting positive growth. Yash joins in with the key takeaways from his conversation with the chairperson of LIC. Yash.
Well, Rima, as you rightly said, it was a very, very strong third quarter for LIC. And in the interaction which we did with the chairman of LIC today, the forecast for the coming year sounds equally strong. A few key pointers as far as the conversation is concerned. He's very clearly said that FY25 will be stronger than FY24 in terms of premium growth. Also, as far as APE growth, the annualized premium equivalent growth in the fourth quarter will be in the positive territory. Remember, there is a significant amount of concern because last year quarter 4 was a very strong base, but LIC confident of doing a double-digit APE growth in the fourth quarter as well. On the non-participating portfolio, the chairman said that he expects near 15% share to be achieved by Q4. Also, as far as the VNB margin target is concerned, he thinks 20% VNB margin is sustainable, and they will look for opportunities to build on this already strong 20% VNB margin. As far as the annuity and protection book is concerned, in the third quarter, that saw some dip. Protection, contracted by 30%, annuity by about 1%. But going forward, he expects to see strong growth as far as both annuity and protection book is concerned. And he's confident of, putting a strong growth similar to the private players when it comes to both these important books. Now, there are three important companies where I also sought the chairman's opinion. The first one was ITC. Of course, yesterday we had the update from British American Tobacco that they are looking to pare down their stake. I asked LIC, who has about 15% stake in ITC, whether they would do the same thing, but a straight denial came on that question. They are not looking to pare down any stake, and later on they'll reassess this particular decision. On Z Entertainment, being a shareholder, they said they're closely monitoring the situation. And on HDFC Bank, they have an in-principle approval, enabling approval from RBI to raise their stake. They said they will keep assessing and execute as and when the market situation looks conducive. We spoke to the chairman. Here's a small slice of that conversation.
Enter FY24, Q1 and Q2 was not that good for LIC. And we have now in Q3, we have started moving and we have shown good result, particularly in margin and VNB growth, all these things. Q3, some improvement is there, and that's why I told it is just beginning. And this Q3 will not continue to Q4. Q3 will continue further. So FY25 will be still better than FY24. AP has shown some positive growth and it will further improve. Looking to our product line and all other things, AP positive growth will be there in Q4. We have experienced in last quarter 20%, but overall for period 16.6%, which is more than 200 basis points, 14.6, now 16. And my sense is it will further stabilize, because looking to the product mix which we are now offering in the market, and those products are giving margin, this will be sustainable, this will be maintained, and some improvement will also I am expecting on this.
Okay, all right. Well, so LIC has bounced quite a bit, and that's the management giving us their guidance going ahead. Prakash, what's your take? LIC at around 1,080 is cheaper than what it was earlier this morning. Is it still looking attractive enough for you? I mean, valuation-wise, trades at one time, EV to price, which is a discount in comparison to its peers. You have the Prime Minister Narendra Modi talking about it. Management is talking it up. Good enough for you or no?
So, Nigel, if we keep these short-term changes or triggers aside, and if you're not willing to look at the fact that this has moved from 700 to 1,000, it's still a good buy for the long term. And mind you, the kind of bond portfolio that it sits on, that is yet to the hold to maturity side of the portfolio. That is still not priced in terms of the kind of treasury gains that they'll make. Probably that will happen by the March end numbers, or probably as the bond market hots up once the India bond market gets included in some of the indices. So there's lots that's there in the existing portfolio itself, and LIC sits on a lot of the PSU holdings which have done so well. So from a mark-to-market perspective, also there are lots of gains. But if you look at the core business, which is what we should be looking at, if you're looking at 2, 3, 5 years out from here, I think that also is likely to continue growing well. And this government is known for supporting, the PSUs or the enterprises that are in this, owned by the government, but which are in a competitive environment as well. So they will keep on getting supported in terms of being able to do better from where they are. So I don't have any doubts on that. It's just that the pace of growth could be different within the private sector and with LIC. So if you're comfortable with that delta, LIC will continue to do market outperformance for sure. But slightly in the long run. And I don't know about short term, whether this moves to new highs immediately or crosses the new highs that it has made. And also, I'm talking more from a positional, more from a portfolio perspective, not from a tactical perspective at this point.
Right. PFC is the other one we want to talk about, right? Because the stock is under pressure. It's down, the last I checked, some 10%. Abhishek is here with some takeaways from the management. I think they did lower their forecast for what growth will look like. Abhishek, take it away.
Well, to begin with, in this quarter, they had recorded more than 16% AUM growth. However, for FY24 and 25, they have guided for loan growth to be at 15% YOY basis. Now, Pradhan Mantri Suryodaya Yojana will provide a funding opportunity of about rupees 1.2 lakh crore. However, their experience shows that, past sanctions are not translating into disbursements, and in that, the cumulative figure in their balance sheet remains at about rupees 1.5 lakh crore. They will see more disbursements in infra space in Q4, but majority of the sanctioned disbursements will take place next year. So they intend to keep the spreads and margins at around 2.5% and 3.5% respectively. Liquidity conditions are really on the tighter side, is what the management did say. With respect to asset quality improvement or stress asset coming down, they are carrying 76% in Lanco Amartank and expect resolution in Q4 FY24. And also Shiga Energy, rupees 500 crore of exposure, they expect it to be resolved in next quarter. Back to you.
Thank you very much for that. By the way, 83% drop in GNA Axle's net profits this quarter, and the stock is down close to about 6% in trade. 22 crore of a profit versus 130 crore. We're talking about autos. Hero MotoCorp will be reporting numbers. Sonia joins in with the key expectations. Sonia.
Well, thanks a lot for that. So, Hero MotoCorp's numbers are expected to be very strong this time around, and some of it is reflective in the stock as well. The stock is up 17% in 1 month. It's up almost 60% in the last 6 months. And good set of numbers is what we're looking at. A revenue growth of 20% on the top line at a little under 10,000 crores. The EBITDA is expected to go up by 43%. The margins are expected to improve to 13.7% versus 11.5%. And the profits could rise by almost 43%. Now, the volume growth has been very strong in this quarter, an 18% volume growth coming in at 14.6 lakh units. There was a very healthy recovery in the domestic market this time around, and the discounts during the festive season is something that restricted realizations growth to about 2%. But other than that, the margins will be very healthy. Margins expected to rise by 220 basis points year on year. In fact, if you map the last 5 quarters, this will be the 5th consecutive quarter of margins rising for Hero MotoCorp. So good set of numbers is what we're expecting this time around. However, as I said, the stock has also rallied about 60% in the last 6 months. So maybe some amount of the good news is in the price. Back to you.
Okay. All right. Thanks a lot for that, Sonia. Well, Prakash is still with us. Prakash, before we let you go, your take on the two-wheeler space itself?
So I do agree. There's a lot of anticipation that Hero will probably pip the others to the post in terms of growth on margins and volumes as well coming back. But if they disappoint on any of those counts, the stock is positioned so vulnerably that you could probably see some sort of a sell-off. But if they do manage to deliver as per the anticipate, and the expectations are quite high, to be honest, Nigel. So within the three-wheeler pack, if you really ask me, I would still go with an iShares, which is a very boring business, but they've not done anything in terms of capital allocation, which could make them stretch their balance sheet. Some of these other players are actually like TVS for specifically, they've gone on a limb in terms of this electric vehicle. The IQ thing has taken away a lot of the new capital, and the return ratios start kind of getting compressed if things don't look up. So, and of course, Bajaj is so dependent on exports, and anything in the markets could take away a little bit of that sheet. But I think iShares will probably be the one that you need to look for in terms of once numbers are out, then markets will be able to do a comparative reset and probably look at putting money behind iShares rather than Bajaj and Hero or TVS for that matter.
All right, Prakash, thanks very much for that. Good speaking with you. Have a good weekend and see you back next week. Thanks indeed for joining us. We have Vikas Khemani joining us, founder at Carnelian Asset Management and Advisors. Vikas, good afternoon. Good to have you here. Thanks for your time. So, in the very near, today we are seeing a bit of shakeout in PSUs, right? Is there an indication of future price action as well? Because stocks have done very well. I think you still own PNB in size in your fund. You're positive on PSU banks. Just wanted your thought process there.
Hi, Prashant. I think, PSUs have had a phenomenal rally and, of course, rightfully. And so after such thing is bound to have some kind of correction consolidation. But I continue to remain quite positive, especially in the PSU bank space or, any PSU which has a structural story. There's a very big reset happening in terms of governance, across PSUs, especially if you were to talk about PSU bank. Governance, technology, and asset quality. All three big issues of those banks have been addressed. Specifically, more importantly, governance and technology. So I think they can continue to do well. They will do well from here also. There's no case for such a steep discount with some of those companies like PNB or Bank of India or any of those, vis-a-vis where their ROEs are going to be 17-18% range, and they have a great network, great technology platform. I mean, now better or similar technology platform, or and the great governance. So I think this, as the perception around the PSU governance changes, you will see them keep getting created.
No, is your case because that these should eventually sort of reset to valuations closer to where private banks trade at?
Yes, I think they are narrowing down. And if you said, like I said, three counts they always lagged on: asset quality, governance, and technology. All three have significant gaps have been filled. 10 years ago, technology was a very big differentiator when it was to be built. Today, it is plug and play. All PSU banks have built significant amount of technology. So frankly, there's not much difference between the services of a technological platform of a public and private sector bank in many cases, right? So now, as that happens, that is bridging the gap, and I think it's likely to further sort of narrow down.
Vikas, I remember in one of our conversations saying that you own Laurus Labs. Now, Laurus Labs has been reporting some weak set of numbers. The hope was that it will turn around in Q3, Q4, but even Q3 has been a dismal sort of a quarter. How should someone who has Laurus Labs in their portfolio approach the stock now?
I think when we bought knowing very well when it was around 300 or so, something 300, 350 in between there, knowing very well that next 3 quarters will be bad. And essentially, we believe that Cdmo is a very big structural play in the country for next 10, 15 years. And if one company which really can benefit and gain from that, it is, sort of Laurus. Of course, there are a few more players, but it's only 4, 5, 6 players market. And opportunity side is very big. So, and the way Cdmo works is it comes into, it's a bit patchy. You can't really predict quarter on quarter, right? So company has gone through a transformation phase. It got a COVID related benefit. Now it's kind of that base settled down. But as and when the Cdmo contract comes, their capacity is ready. I think you could see this stock will do very well according to me. But our view is always 3 to 4 years. I mean, look at what happened in Newland, right? I mean, for market pushed it down to 1,000 rupees, and as 2 contracts came, 2 quarters stock has kind of again sort of done very well. So CDMO nature of the business you must understand And if you understand that, I think, your ability to then put up with those quarterly volatility would be very better.
Okay, all right. Hi, Vikas. Nigel on this side. Good to see you in. Vikas, what about some of these new age themes? You're getting very divergent moves out there. I recall, say, around 18 months or so ago, people were saying you buy the basket in different weightages. Now, in fact, some of them have done very well from there, but some of them have even half from there as well. How do you approach this theme? Clearly, stocks like Zomato, they're looking quite well. And the QSR overvaluation seems to be coming down, and this could be an indirect way of playing it. While stocks like Paytm continue to reel under pressure. Your take?
I think I never believe in, buying in baskets, because you have to understand individual business model and, growth prospectus. I think, there was a time when under the new age, everything got sold and everything got sold at a crazy price. In fact, if you remember about, 2 years ago, we wrote a note also on that, fad, FOMO, fade, that people are acting out of fad, and there's a fad going on out of FOMO, people are acting, and it will fade away. And we have seen that happening. Of course, out of this, some players will emerge, some players will become big, but, this is such a disruptive area. I don't think anybody can say for sure. You have to keep sort of watching out. So far, if you ask me, I mean, I don't like, to be very frank, many players, except Zomato. I don't think any has done well, to be honest. Paytm in between was looking good, but we saw what has happened, right? So we've got to really, see, and it boils down to understanding the business model, management, and everything. And it is never about, new age. Every business has to have technology. Today, banks, ICICI Bank, look at, they spend billions, I mean, a significant amount of money on the technology. Does not make that, and they also have as much technology as probably as Paytm, right? So why should Paytm get more valuation than ICICI Bank? Only on that count, I would say. So I think we look at very differently these players. Of course, anything which is disruptive, which can change, you have to understand, you have to pay attention to, but you just can't really broad base and buy a basket. In my opinion, somebody who does that will be set in for disappointment.
What about particularly on Zomato, which is now proving itself on the execution front? As they've committed, they're reporting profits. Profits are actually more than what the street was anticipating. So on Zomato, forget a basket of new age, technology companies and clubbing everyone and painting everyone with one brush. Your thoughts on Zomato now?
So it's again a two-player market, sizable player. My only question is that today, how do I value that company? Even if I give, let's say, full credibility two-player market, after price hike, they will make some profitability, right? But still, on the valuation metrics, they don't stand anywhere according to me. And even if I take 3 years out profit, still it looks, if I were to evaluate them like any other consumer company, right? Still, I think it's, in my opinion, at the current valuation also. So I think we, at maybe 50, 60 rupees, it made a lot of sense. People who bought, we did not buy, I can tell you that. Made money, but I am still not convinced about the kind of valuations it's commanding. So, I would still sort of be cautious and careful. Of course, it's a good company, good two-player market. It can do well, but how long restaurants, if you see restaurants, margins are also going away with the kind of takeouts they are taking. So, in my opinion, for long, it may not be sustainable. Somewhere, you will see that the profit pool or the cost pool has to kind of readjust, whether it will in favor of Zomato or QSR. I think right now it is in favor of Zomato after the price hikes, but I think, QSRs will have to there has to be some balance. And on future is sort of yet to be known. So I am not sure. So we will still stay away.
Fair enough. You said you didn't buy, but I mean, that's the beauty, right? You don't have to buy and you can have winners elsewhere, and you had winners elsewhere. Vikas, you just if you want to, you own Quick Heal in your portfolio. You want to talk to us about that? What's the opportunity you see there?
So it operates in a cybersecurity, one of the fastest growing segment. It's one of the oldest company in the country. They are going through a transformation or transition phase from consumer-led to enterprise-led, and enterprise solutions are very, very fastest growing and very critical segment right now in IT. And this is in my opinion 10-20 year big opportunities, and in the future multi-billion-dollar companies will come out in this space. That I'm convinced. We think that this company has that potential. Now whether it will do it or not, that only future will say. We think management is great. The new management is again, even who has huge amount of credibility or could deliver in this space. So our call is on that good space and right management. And I have seen generally this kind of combination creates future multi-baggers.
The new management that Vikas is referring to, the head
I'm not advising on anything, so please put disclaimer. We own the stock, but I'm not advising. So as usually, stay away from commenting on stocks, but so I just can talk about the space.
Okay. Just wanted to, for the benefit of our viewers, the management change that Vikas is referring to is the head of cybersecurity at Infosys, Vishal Salvi, had taken over as the CEO of Quick Heal. So he's got the right credibility, the right expertise, and now he's the management change that Quick Heal has seen in the last couple of months.
Absolutely. Because we'll leave it there. And, disclosure, I think you laid it out very well. So nothing Vikas spoke about is to be construed as investment advice in terms of individual securities. It's a discussion in general, overall for sectors and some of the securities as well. Thanks very much, Vikas, for joining us here. Great to have you with us here on CNBC TV18. Have a good weekend, and we'll have you soon again. Thanks very much. Well, on that note, we'll take a quick commercial break here, but we're also excited to announce that CNBC TV18 is back with the second season of India's largest campaign on gender parity. Join us for the mega launch of the event of HSBC presents CNBC TV18's Future Female Forward, the Women's Collective. Top leaders, influencers, policymakers and trailblazers all under one roof to chart a path towards bridging the gender gap. This is live from Delhi on Saturday, 10th February, 5 p.m. onwards, only on CNBC TV18.
Welcome back. You're tuned into Closing Bell. You're on CNBC-TV18. Just 20 minutes or so to go, and you're into the weekend. The Nifty, for the time being, is at the high point of the day. Good time to get in Nimesh, who joins us, tell us what he's picking up in terms of D Street chatter. Hey, Nimesh.
Hi, Nigel. A good recovery for the markets, and the good part is there has been an equally strong pullback for the broader markets as well. Despite that, the broader market is down 0.5%, and there are a lot of stocks which are under pressure today. But the big shakeout was in the PSU stocks today. Big sell-off in the first couple of hours of trade in the PSU names. And remember, I've been saying this for a while now, that there is a bit of churn happening in the PSU basket. Also, some domestic mutual funds have been actively booking as well in the PSU stocks. So maybe there were early signs of some bit of caution required in the PSU, and that played out. But again, my sense is today's sell-off is not led by the large institutions. It's largely the retail and the HNI unwinding which happened in a lot of the PSU names. That's the overall feedback. From a flow perspective, while it's mixed, an interesting feedback that after a very long time, some bit of interest seems to be back in the consumer stocks from the larger institutions. So that's one space now we need to watch out for. From a technical perspective, again, the range is very narrow for the time being. 21,690 on the downside, that's an important crucial support level. And on the upside, 21,800 is a level to watch. If that gets taken out, you could see some bit of short covering. But range bound day of trade, good recovery from the lows. But again, some signs of churn is very much visible in the PSU basket.
What about stocks, Nimesh?
Well, in terms of individual names, the first stock is Hindustan Foods. Been consolidating in a very narrow range in the last many weeks. In fact, recently the company raised funds via QIP as well. Now I understand there's going to be a large block in Hindustan Foods very soon. P is going to be a likely seller in that stock. So that's something to track going forward. The second name is United Spirits. That's been buzzing in trade today and good volumes as well. I understand some bit of interest is back from larger institutions. In fact, a leading long-only fund seems to be an active buyer in United Spirits, and hence a big up move in that stock in today's trade. The third name is Godrej Industries. The holding company of the Godrej Group has rallied pretty smartly from the lows of 600 to 800, 830 now. And at these levels, some bit of block offers have been shown to a lot of investors. So maybe some bit of profit booking is visible in that stock from larger institutions. Remember, it's not a very liquid stock, so to speak. And the last name is Dabur. I spoke about consumer names. Dabur stands out. For the second day running, the feedback is there are very strong buy flows. Expect high delivery volumes in Dabur from larger institutions.
All right, interesting list there, Nimesh, as always. Thanks very much for that. Well, State Bank of India is continuing to move higher and is charging up 10% so far in February. Now, is 2024 going to see another leg of re-rating for the stock? Hormuz is here with some quick numbers and analysis. Hormuz, over to you.
Well, it was 10% when we last spoke about it. The stock has moved even higher from there. It's now almost up 12 to 13% this month now. And this is as of date, on a year-to-date basis, it is the third best performer on the Nifty so far, behind BPCL and Coal India. So 3 PSUs dominating the index so far this year. But what has been some factors that are going in favor of SBI, one of which is its underperformance last year. Now, in a year where the PSU index was up 80%, the PSU bank index was up over 30%, SBI was up only 4%. And it was the worst performer on the PSU bank index despite having the largest weightage on the index last year. So some positive news flow that has been coming on SBI over the last few days. Yesterday there were some reports that it was going to sell some of its 26% stake in Yes Bank. They denied that. They called those reports factually incorrect. ICICI Lombard mentioned last night that it has increased its stake in SBI by, it's just 0.04%, but it is a hike nonetheless. So that is a positive. We highlighted this in our dealing room chatter on Wednesday as well, that a leading global fund is an active buyer in SBI. So that is another positive development. And just this morning, Chris Wood of Jefferies, in his greed and fear, decided to trim his weightage in HDFC Bank by 2 percentage points, and 1 percentage point of that went to SBI. So a lot of positive news flow coming in there. However, on the flip side, the underperformance has also meant that domestic mutual funds have been constantly cutting their stake in SBI for around the last 6 quarters now. From around 13.75%, it is now down to under 12%. That is the stake that mutual funds currently own, is around 11.7%. in SBI. The management spoke to us. They said that Q4 will also see a one-time impact. The one-time impact impacted profitability this quarter as well. But they said that they are on track to see them meet their loan growth guidance in FY24, and they also do not see a major impact on NIMs from there on. So things falling into place. It does look like that it is falling into place for SBI. The stock is at a record high, and it's probably being an outlier among the PSU sell-off today.
All right, Hormuz, thanks a lot for that, and wishing you, I think you're off for a holiday. So have a good one, mate. See you in the next week or so. Cheers. Well, let's get in Rahul Mondar as well back on the show. Hi, Rahul. You're not off for a holiday, so let's hear what you have to say with regard to stock picks. Rahul, you're on mute, so let's hear you.
I
Rahul, you
think the
unmute yourself.
chart should continue within, stocks like an SBI. If you're just looking at the very, very near term, I probably think around 748 to 750, that's a reasonable target to be shooting for. If it's just, the very short term that you're looking at, keep a stop loss at 712 if you're attempting this trade. I spoke about banking being the difficult set, but again, this is one of those outliers. But again, there's a lot of room also within banking. There's a lot of catch up. A Kotak Bank or an HDFC can do this. So, I think that whilst I say that there is this one stock that looks positive, there are enough that look negative. So don't take this as a buy bank nifty call. It's more specific to the stock. Now, other stocks which look, when you look at some of the top leaders today, one that stood out to me was, a stock like Grasim. Agreed, it's not all that in terms of a trader favorite, but clearly looking at this, moving to about 2,230 levels. So one could go long with a stop loss below 2130 for that target. And thirdly, Bajaj Auto is another stock which I've been watching closely, and it's been consolidating for a bit. And I think it could be, a fairly reasonably good play with a 76.50 stop loss. It's poised for newer highs. So closer to about 78.80 is where I'd peg its target.
Right. Rahul, thanks very much for that. By the way, the markets moved up, right? Once again, 70 points, and we're at the day's, not at the day's high, but very close to it. The high is 21,126. Sorry, the high is 20. Let me just get this right. The high is 21,804. We're at 21,786 on the index. So pretty close to those levels. Market breadth also, if you can have the advanced decline ratio, it was almost 6:1 in favor of declines. It's now it's 2:1. 800 stocks are higher, and you've got about 1,600 stocks which are little over 1,600 stocks which are lower. So vast improvement on that side as well. Arti Industries shares are up about 4%, and we've seen another quarter of sequential growth. It's been a tough phase. I think the last couple of years for Arti. Are things turning around? Sonal is here with some perspective. Sonal.
Well, that's what the management suggests, that the recovery is underway, and we are seeing that in numbers in terms of second consecutive quarter of sequential recovery at a time when the sector is facing a lot of headwinds. In terms of YOY numbers, yes, it was a decline that we saw, but revenues were up 4%. The EBITDA declined, but just 7%. Their operating profit margins were down 200 basis points, leading to a profit decline of around 9.5%. But the sequential growth was quite strong in double digits. Their revenue grew 20%, their EBITDA grew 15%, and profits were up 36% as well. The management said that discretionary demand is coming back. This was one portfolio which was hurting a lot in the last couple of quarters. They say dyes, pigments, polymers, select specialty applications, they are seeing demand coming back. Challenges are still there for agrochemicals and pharmaceuticals, and it will take some quarters to see the recovery here. They are talking about sequential improvement in volumes because of better demand visibility for products which are targeted for applications within the discretionary segment, and they have also witnessed general improvement in pricing as well. So both volumes and pricing are improving according to the management, and that bodes well for the company.
Okay, all right, Sonal, thanks a lot for that. By the way, keep an eye on a couple of stocks. You have Z Entertainment as well as Z Media, both of them spiking to the high point of the day. And Geo Financial Services, well, that one as well, spiking up as we speak. Well, GMDC seems to have a bit of an off quarter. The net profit is down drastically, down close to around 56% odd. And I think the revenue number as well was looking a little bit tepid. So after the kind of run-up that we have seen, maybe this has come as a bit of an excuse to take some money off the table. The stock has been a big outperformer. I recall explaining it at around 130, 140 rupees. And the stock went one way. Maybe people are building in more than what they could deliver. But for the time being, these numbers look a little bit tepid. For the time being, we'll slip into a short break. On the other side, we'll continue to focus on markets. Don't go anywhere.
India wants to speak to the finance minister, India speaks to CNBC-TV18. And when India wants to understand the union budget, India watches CNBC-TV18. The nation's #1 English business news channel on Budget Day. During the FM speech, throughout the budget week. Follow the leader. Follow India's budget headquarters.
Welcome back. The pullback in the markets continue, particularly on the mid-cap index. The mid-cap index at session lows was down nearly 1,300 points, and now it's down about 450 points. So there has been an over 900-point recovery on the mid-cap index from the day's low, though it's still going to end with a pretty deep cut. For the week, though, the mid-cap index is up close to about 0.9%. The Nifty is up down 0.3% for the week. So today, it's ending higher and pretty much at the day's high. Apollo Hospitals is one of the big movers today. It's up close to about 3%. Sudeep Bandyopadhyay is with us on the show now. Sudeep, have you looked at Apollo Hospitals' numbers? The company is sounding a little more confident about Apollo 24/7.
Yeah, absolutely. In fact, you're absolutely right. The management commentary, they mentioned that the diagnostics margins are improving. And the retail shop 24/7, there has been significant positive developments. I think the way Apollo has positioned 24/7 should work very well in the long term. They have a captive business and they have a fantastic brand name, which does help them, get retail customers more and more. Apart from the institutional sales and the in-hospital sales, which they ensure. The delivery system which they have introduced again is great. So I think it's a nice niche business sitting inside Apollo Hospital. At some point of time, there can be value unlocking. We'll have to wait and watch because this entire online medical, online medicine retailing space is in a bit of a flux. But at some stage, this will be a value unlocking opportunity for Apollo Hospitals. Overall, we are positive on this entire healthcare space, and Apollo Hospital is our top pick.
Okay, Apollo Hospitals is the top pick coming through at this point in time. By the way, Sudeep, would you want to take a punt on Paytm?
Not really, Prashant. I think, I've been maintaining my view consistently that we need to be a little careful as far as Paytm is concerned. We have seen the price move up significantly in the recent past to close to 1,000 when some developments happened, then started correcting when RBI came down on unsecured personal loans. And of course, now this incident where this major regulatory challenge has cropped up. I'm not sure how things will unfold going forward. RBI is supposed to come out with an FAQ that will probably suggest a transition. Very, very uncertain. I think it's like catching a falling knife. I don't think we should go there.
What about, so I was just looking and we'll put this piece out a little later. The biggest earnings upgrades after the third quarter numbers. Actually, they've, the top one is PB Fintech, which has seen a massive earnings upgrade. Zomato, which just reported, has seen a big upgrade. And there's one more, but again from the new age space. But any thoughts on these two? PB Fintech actually especially.
Absolutely. I think, this business is an established business. Insurance broking has been I think, 100-year-old business. So they have digitized and they have done it in a very structured manner. There were challenges in the business. They are overcoming those challenges. In the long term, I think it's a fantastic business and they have created a nice engine which should help them going forward. The cost of operations over a large, at a large scale is significantly lower compared to a brick and mortar or a digital approach. So I think PB Fintech for long term is good, and the benefits of scale is now getting visible. To the list of new age stocks which you mentioned, I would also like to add delivery. Again, it's a 1,000-year-old business. You need logistics for everything. What delivery is trying to do is, doing it in a structured manner with a lot of technology. Eventually, I think at a scale, they will start doing well. So will Nykaa. In fashion and beauty is a international business. LVMH, is probably one of the best and most rich companies in the world. The owner is one of the richest, and they are into the similar space. There's absolutely no reason once they get their act together, they won't do well. And I think they are both Nykaa, PB Fintech, and to an extent delivery. If you see this quarter result, they're trying to getting their act together.
Okay, Sudeep, thanks a lot for giving us your view on that. Wishing you a good Friday evening and a rocking weekend ahead as well. Appreciate you joining in as always. By the way, just pull up a couple of stocks. Geo Financial Services spikes up. It's moved to the high point of the day. India Bulls Real Estate, that's another stock that's moved higher. So both those two stocks should come up for you on your radar. Well, let's wind the markets down. Then top gainers on the Nifty today, SBI and Grasim. Both of them spiked up between 3 to around 5% in trade. Apollo Hospitals management sounded extremely confident, so that stock had spiked up. Escorts, they cut their guidance, had a repercussion even on Mahindra & Mahindra, so that stock was down close to around 2.5% in today's trading session. Bharti Airtel did come in for some profit taking, and a couple of these PSU names that had a good run, NTPC and ONGC, both of them did come in for a bit of a knock.
Well, the Nifty and the Sensex are going to go home with gains. Gains are about 0.3%, and they're pretty much ending at the day's high, lifted by strength in the banking. So banks provided leadership. The Nifty banking index up 1.5%, with State Bank of India leading the chart, 3.7%. ICICI Bank, Axis Bank also surging in trade. Other gainers include Grasim, 6% up on that. Sun Pharma, Hero MotoCorp ahead of its numbers also saw some buying, and Britannia, after yesterday's losses, reversed some of yesterday's losses to end up in the green. But mid-caps were the problem today.
PSUs, right, Rima, across the board, long list of losers there. So, PFC and REC, large cuts. There was SJVN, RVNL, RailTel, the railway stocks which sold off sharply. Oil marketing stocks like IOC came under a lot of selling pressure. But these are, look, when you compare the extent of the gains, just pullbacks. That's about it. Hindustan Copper, which has done so well, that came under some pressure. There's BEML, there's the insurers, New India, GICRE, they came under some selling pressure. Engineers India, Neyveli Lignite, which reported numbers, for the second day running, that was under pressure as well. But I think we're going to wrap up on this edition of Closing Bell. It's a goodbye from all of us here on the Closing Bell team. Thanks for staying with us. Our Friday special, Smart Money, comes up next. Stay with us.